If somebody joins the market today and spends 2 years in the market, and at the end of 2 years, if he has not lost his money, forget making profit, he is a successful guy. The problem is not with money. Money is available in plenty in the market. There are thousands of crores available. Strategies also will evolve, and no strategy is a holy grail. All strategies will fail someday.
Trading and investing are two different things. Start understanding where you psychologically fit into it and then start working towards in that direction.
So let's suppose I have 1 crore fund.
But 1 crore, how many people do have 1 crore today? So if you take intraday, see, that is exactly
First
what
of
you were
all,
telling.
for me, somebody coming into trading with 1 lakh capital itself is a crime.
Exactly, but that is not what really
You
is
can invest
happening
with
today.
even 10,000.
That's what, see, investment psychology is different trading. When you investment, you can do with 10,000.
Yes.
But today we see traders coming with 10,000.
That's not correct, because you are having 1 lakh rupees in your pocket, you are walking into a Mercedes Benz showroom to book a car. How does it work? If you have 1 lakh rupees, you should buy probably a second hand Alto.
So what I understand is trading is a big money game.
Yes.
If you have to make money, then you need to have big money, big bucks, then only you need to get into trading. Because with the small money, there is a chance of losing.
So we will make a small correction.
Okay,
What
go ahead.
I will tell traders is, if you have small money, use that money to learn trading. See, if you put 1 lakh rupees today to learn trading, I have no problem. You burn a portion of it for your learning, another portion you lose in market, that is fine.
But 1
but
lakh
1 lakh will never become 10 crores.
But 1 lakh is a small money for a big trader. For you, for a 1 lakh for a normal person is still a huge money, right? Like in Pickright size, I see 1 lakh is a big
That's
money.
what I am telling you. See, at the end of the day, what it boils down to is your expectations.
Exactly.
For example, I'll be very honest with you. I have some big HNI clients who are very happy with 15% return per year, which is 1.25% a month. I have clients and they are absolutely happy. The problem is, big players want less profit, small players want
big profits.
But for a big player who deploys 1 crore, even 1.25% is 1.25 lakhs. For a 1 lakh guy, even 10% is 10,000.
So that's exactly where social media influencers are doing it, right? They are actually telling the small guys to become traders and lose money.
See, my belief is, if somebody has 1 lakh, he should use that money to learn the market, to understand the market structure, understand market psychology, understand behavior, play with the market, trade in the market, build the temperament. He need not make profit. I will give you a stat. If somebody joins the market today and spends 2 years in the market, and at the end of 2 years, if he has not lost his money, forget making profit, he is a successful guy.
I agree, completely agree.
So that is point number 1. Point number 2, if he is really capable person, if he can showcase his talent to the world, there are hundreds of guys who are willing to invest. The problem is not with money. Money is available in plenty in the market. There are thousands of crores available. But the point is, there are not many genuine traders. You show me 10 good traders who are 100% genuine, who have made at least 25% return in the last 2 to 3 years per year. Show me.
So you see people who are coming onto the social media and showing up that I have made 1 crore profit, 2 crore profit,
No,
10
that
crore.
is anyway gone. See, after this Zerodha Verify P&L story, all this PDF, all these documents, Photoshop screenshots, everything has stopped now.
Okay.
So majority of them are not doing it. Once somebody does, they get caught in no time. If somebody makes 25% per year on his capital consistently over the period of time, he is going to make 100x in 20 years.
That's a very important point. Thank you, Ashok, for bringing up. And that is what we are also strongly believing. It's a long-term game. Stay invested. And if you actually believe it, invest it, and then patiently wait, and definitely you're going to reap 100x. So 25% CAGR is what it actually takes you there. And one more point I want to add, Ashok, where you said, right, if you have 1 lakh and you want that 1 lakh to start learning into the trading, that's a path. If you have 1 lakh, start investing, and that also can reach you to the path in the long term. So trading and investing are two different things. Start understanding where you psychologically fit into it and then start working towards in that direction. And that's what strongly I feel though.
And I was trying to explain you about my trading strategy. The process is very simple. Suppose I have a 10 lakh account, I will split that into two parts. 80% money goes into equity or mutual funds, 20% money goes into cash in the demat account. So, what we do, we take pledge with the broker and take an extra margin from the 80% equity, and we start trading in that account. Here your equity gives you roughly about 12 to 15% profit. This side we try to generate a minimum of 12 to 15% profit. Both combined it will be almost like 24 to 30% profit. So, 26% CAGR will give you 10x every 10 years.
Oh, perfect.
That is
I
as
agree.
good as 100x in 20 years, that is pre-tax. Even post-tax, somebody generates 21% CAGR, that is 100x in 25 years. There is no investment in the planet which will give you 100x with a structured
Growth.
flow and growth. So,
Agreed.
technically pre-tax you need to double money every year at 26%, post-tax you need to double money every 4 years at 21%. If you can generate this kind of a return, nothing like it.
That's a real good point, Ashok. In fact, actually, we were discussing off camera earlier about how the SIP is something so powerful and
Yeah.
how it can give 100x, right? And right now, the people who are in their youth, like in their early 20s and they are into 30s, and how it is they can actually use that. So, I want you to touch upon that particular thing and how today if somebody starts putting even 10,000, you said it so beautifully, I'll leave it to you, how they can actually make that 10 crore in 25 years in a realistic way, if you can explain it, right? And that's really important for people to see, understand and start acting upon it.
See, the most important aspect here is power of compounding. So, we all say compounding is the eighth wonder in the world. That is something people don't understand. See, most of us, we started working at the age of 22 and we retire roughly at 60. So, more or less we have 40 years, that is about 4 decades. So, if you try to invest at the age of 22 properly, okay.
No one told that to
No one
me,
told that.
Ashok. I would have done it better. Actually.
We would have done that, but because we were very busy buying Samsung mobiles and Royal Enfields, so that's always there. But the fact of the matter is, if that person invests for 20 years, he can retire at 40. Because the investments that he has put for the next 20 years, that will be much bigger than his salary at the age of 40. That is point number 1. Point number 2. Suppose somebody draws X amount of salary, government takes 30% as tax.
Let's put a number for people to easily understand, right? Somebody taking 1 lakh salary a month.
Take 1 lakh salary a month. So, government takes roughly 25,000 as tax. If that person saves just 10% of his gross, not take home, gross salary,
10,000.
10,000 every month, and every year his salary will grow by on an average 10 to
12% minimum.
10 to 15 average, correct, if it grows. And similarly, if this person increases his SIP amount by, let us say, 12 to 14%, he can aspire a corpus of roughly 25 crores by the time he retires.
See, that is amazing, right? Somebody earning 1 lakh rupees, starting to put a 10,000 rupees SIP.
Yeah.
In a more structured and disciplined way.
Yeah.
Within 20 years, he can come out with a 25 crore or 20 to 25 crores.
At 40 years.
At 40 years.
But within 20 years, he can plan his retirement because this investment will overtake his salary.
Exactly. So, and this is so important, right? That is the power of investment, and that's exactly what we should actually start telling or guiding the youth. And that's where we say, right, Pickright is a platform for next billion users of India, and I say your Traders Gurukul too. Power of compounding, the power of investing in a more structured and disciplined way will actually, you don't need to take any EMIs or loans.
Correct.
This is what will actually help you to have a better life in future. Now that we understand that investing is a separate thing and trading is a separate thing, and for investing you need a different mentality, for trading you need to understand, learn and then become a trader. So that's why we have so many books around trader psychology, right? Because that itself is a different topic altogether.
True.
And one day we can sit again on talk about trader psychology. Now coming to the trader psychology, what I want to understand is, does the algorithm, whatever you are, the strategy on whatever you are building, does it take into consideration any psychology or a human thing, or is it just numbers and intelligence what you do? I want you to expand more on the algorithm, the other startup, and talk more about that.
See, if you talk about algorithms, there is a myth. Okay, there is a misconception. People think that if I am able to automate something, it will give me a lot of money, because a robot will not have any emotions. A robot will not know what money is. It doesn't have greed. It doesn't have fear. But the fact of the matter is that robot is operated by a human. He will have emotions.
Exactly.
He can always stop whenever he wants. He can always on it whenever he wants. So technically, there is nothing like a robot is emotionless. It is emotionful because it is driven by a human who has emotions.
And the fear of failure is very high in a human.
I know so many quant players who try to override their quant model. Even we have done it few times during the initial stages of our quant career. No, we don't do. We follow the process.
Okay.
But the point is, the second misconception is, if you can automate a strategy, if you do an algo, it will give money all the time. It's not so. For example, whatever strategy that you are trading today, if you automate it, that is an algorithm, that's it. You are doing something manually, you buy when X happens, you sell when Y happens, you take stop loss when Z happens. The same thing, you write it in the form of a program and automate it. If this makes money, this will also make money. If this doesn't make money, this will never make money. So it's not like you automate something, it will give you money. That is not the case.
Okay.
Automation also is just trying to eliminate your presence. That's all. But ultimately, your strategy should be capable and strong enough to have reasonable expectancy. It should make profits in manual also. And then only you should think about automation. I strongly believe if somebody is not a profitable trader manually, he should not come into algorithms.
Okay, no, point well said. Do you suggest people to straight away come to an algorithm or a strategy, or do you suggest they have to be manually trading and then enter into the strategy?
See, this is an evolution. For example, as I told you, we all start our career in financial markets as investing, then we do some future trading whenever possible, then we jump into options. So we slowly get into the more aggressive things. But generally what happens, once you have a consistent strategy, if it is making you a decent money, then only you should think about automating it. If you try to automate something without having any clarity on what you want to automate, there is no point. You are beating around the bush. So the foremost thing is your strategy must be clear. Many of the times I talk to many traders, they say, Ashok, I want to automate my strategy. The first question I ask is it profitable? 50% will disappear there. 50% not yet. Then why do you want to automate? If he says yes, it is profitable, the next question is, can you put it on a paper? Whatever is your strategy, can you put it on a paper? In that 50% get eliminated. Because many times you yourself cannot put your strategy on a paper.
Okay.
Because there are so many things your eye sees. You can't define rules for that. Next, that paper your family member should read, either your mother or wife or husband should read and understand it. For you to reconfirm what you have written is what you already doing. So that to reach that level itself is a long task. Out of 100 people, 90 people fail there. Only 10 people will come to the automation level. Once you automate, there are again new other challenges, slippages, okay, optimization, curve fitting. There are so many technical aspects that you need to verify in an algorithm. So in short, an algorithm is nothing but a manual strategy which is just automated and eliminate a person from the point of action. That's all.
Okay.
But one advantage is, suppose you are tracking Nifty as a strategy based on some bunch of rules. But in an algorithm, you can track 100 stocks at the same time. That you can do, because you can't track manually 100 stocks, right? So that is something which an algorithm can do. Second, the benefit of algorithm is you can go in the past and check how it behaved. For example, we go minimum 100 months in the past
Okay.
and check how the algorithm behaved in various market conditions. That is not a process to reconfirm and
Ascertain.
get the comfortness of a strategy being pursued. No, my ultimate purpose of going in the past is to verify what is the maximum loss that can happen for me, and based
It's
on
always
that,
being very cautious.
yeah, so what is the maximum loss that will happen if I deploy this particular strategy, and can I take this pain? If I say yes, I can take this pain, no big deal, then only I will deploy, or else I will never deploy. Backtesting is a very, very important science. People do not understand the value of backtesting. For example, people say, what is the use of backtesting? Markets are always not consistent. Past is not a proof of performance of future. I always say, if past is not the proof of performance of future, why many times price remembers history? There are so many times price in the past would have come to a point and gone up, again same point it would have gone up. There can be 100 reasons, but price remembers history.
That's a very important statement, right?
Remembers.
The levels again come touch, they touch back again and again.
For that, there are 100 reasons for that, but price do remember history. The purpose of backtest is not to convince you that a strategy is great. The purpose of backtest is to tell you what is the worst loss that you can have any point of time in the past, and then can I take this pain? Yes, take it live. No, drop it back. By doing that, you are saving a lot of money. When you are doing backtest, you are not deploying money.
Agreed.
So testing is very important because it gives you conviction. And today we have a very clear goal. For example, let us suppose if I deploy a strategy, let us suppose in history it had a maximum loss of, let us say, 1 lakh. Now what I will do, I will assume 2 times. When I deploy in real time, the maximum loss of future can be 2 times of what happened in past. So can I take the 2 lakh loss? Yes or no? If it is yes, I will take it live. No, I will drop it off.
Yeah,
This
it's
is the
a decision making which you
and
need
there
to
is
go
no
through.
strategy which is a holy grail. Any strategy can fail any day. People ask, then how does your strategy model work? I always tell, see, Sachin retired, Dhoni retired, Kohli will retire someday, and after him somebody else will come. Now, did Indian cricket team ever retire?
No.
No. So cricketers will retire. The cricket team should never retire, and it will never retire. Similarly, when you are trading, you should not trade one strategy. You should trade multiple strategies. Why? You don't know which strategy will fail which day, and whenever it fails, it's like retiring that player and getting a new player. You will not do that daily. You don't replace cricket players every day. You might do it quarterly, half yearly, yearly.
There is a shelf period.
Correct. Same way, strategies also will evolve, and no strategy is a holy grail. All strategies will fail someday. Whenever a particular strategy fails, be ready to replace with another strategy. That is not changing strategy. That is replacing a bad guy with a new
That's
guy.
a strategy.
Yeah.
Changing a strategy with a strategy itself
But the
is
whole
a strategy.
strategy will remain.
Exactly.
Now, for example, is there a situation in the past where the entire cricket team is replaced? No. Only few cricketers will be replaced. Similarly, few strategies can be replaced. Nothing wrong in it. Because market structure changes, market behavior changes. For example, there was a time, there is a strategy called 920 straddle. So every day 9:20 in the morning, you write a at the money straddle and run it till 3 o'clock, 3:15. Continuously it gave money. People made lot of money, and market understood it. And now today that strategy never works. Have you heard of turtle traders?
I did, but I'm not really.
See, what happened? Two friends, they went for a drink. This was in 1984. They were having a drink. One friend said, "You are a genius. You are a bond trader. So you know how to make money from markets. It's not possible for common men." So this man said, "No, I say nahi hai. It's not like that. Anybody can be trained." No, you're being too humble. He said, "No, I can train anybody. So let's take a challenge." And he challenged. Next day in Wall Street, there was a big article looking for budding traders who are interested in finance, mathematics, rules, okay, who want to get into the world of markets. Some experience is fine, no experience is also fine, but you need to have a good
Open mind,
maturity level
and
to
learn.
learn to follow a particular process.
Pattern.
Lot of people applied, and he hired few people and he called them turtles. okay, and called them turtle traders, because once he went to Singapore to a turtle farm where they were groomed from small babies to big turtles, and he called these fellows turtles and gave all of them some few millions of money and gave them only one strategy, simple strategy, and told you trade any asset you want, like gold, crude, okay, any asset you want you trade, but only with these rules. The rule was very simple: buy when 20-day high is broken, 20 days ka high is broken, buy.
And
Sell when 20 days low is broken. Keep doing it. That's it. That was the strategy. He gave 3 rules. Number 1, don't tell your family what you do. Number 2, don't tell the strategy to anybody. Number 3, don't tell which asset you are trading to anybody in this office. None of you should talk. Eventually, they all made millions of dollars of money, and he proved to the world. And again in 1989, I guess Wall Street made an article, winning traders can be made, need not be born. And he made an article, and to prove the world that yes, traders can be done. Again, that comes with process.
That comes with discipline, structure and a strategy.
But that strategy, which made a fortune in between 84 to 89, today it will never work. I can automate it and show you in 30 minutes time. It doesn't work today.
Yeah, because times change.
If everyone
The
does
dynamics,
the same thing.
yeah, it's a dynamics, right? Yeah. So that brings down to one single question, like, can anyone, can like people like me or anyone, right? Can they become an algorithmic trader? Can they actually go ahead and do an algorithmic trading, or does it need a separate skill? Or that is the first question. Second question is, do you suggest that there should be a different persona of someone to get into a strategy and start doing algorithmic trading? So these are the two questions. I think every one of us will have the same question. Am I good enough for an algorithm?
To be very honest with you, I don't code. Though I worked in IT industry for 10 years, I was heading the solution management for supply chain in SAP for 10 years. I was a product manager. I never wrote codes. I have a R&D team in my office. When I was a budding algo trader, I had hired one developer from Indonesia. I hunted him in a website called freelancer.com, which became upwork.com today. You can go into the website, you can put a requirement. I want someone to write me a Python code and a particular strategy. People will come and pick it. That kid I hired him for hardly $100 those days. So I used to pay him what, 6,000, 7,000 rupees a month. For him it was a big money. He was called as computer scientist in Indonesia. I said, what do you mean by computer scientist? He said, engineer, right? BTech, BE. That is called computer scientist in that part of the world. That's what I realized later. He used to code for me. I used to give my requirements, he used to code, and I used to deploy. You don't need to learn coding to build a strategy.
Okay.
If you are a trader, you need to have absolute clarity on your strategy. When you will buy, where is your stop loss, where is your target, which asset you want to trade, what is the volatility of that asset, what happens with when drawdown hits, what can be a maximum drawdown, what should be a position sizing, what is your money management rule, how do you manage your risk, that's all. If you have all these things bundled on a paper, you can go hire somebody who will write the code for you, and you can test it in real time with a small money. If it is working.
What is that small money? 10 lakhs?
Yeah.
10 lakhs is
Need
what?
not be 10 lakh also. For example, today Nifty 1 lot margin is 1 lakh. To test, you can deploy 1 lot of Nifty. You can test.
Yeah.
To test a particular strategy.
So that means, to summarize, to test if you have your own strategy and if you want to test it, 1 to 2 lakh is good enough to start.
Definitely more than enough.
And then,
to test. See, the whole point is simple. If you have any small amount like 1 lakh, 2 lakh, 5 lakh, you can't make a fortune in trading. That is a myth. I don't know.
But if somebody wants to test and get into algorithm,
see,
right?
That's the whole point. My philosophy is, if you have 1 lakh rupees and you want to come into trading, nothing wrong. But you should change your thought process. That 1 lakh is your training fee. Spend 5 years. Learn the market, understand the market, build a system, and then go and give it to somebody who will give you 1 crore. Don't dream of taking your 1 lakh to 1 crore. That will never happen for you.
Yeah, that's a very
learn and go to somebody who has 1 crore, 10 crore, 100 crore. He will pamper you.
Yeah, and markets are not going anywhere. Markets are going to stay here.
It is not the great Amazon festival, no?
Exactly.
So it will always be there.
Even in Amazon, you have Republic Day, Ugadi, everything you get.
Correct.
It, right? Yeah, that's very interesting where you said how somebody has to look at an algorithm. and how if they want to create their own algorithm, how they have to start with it, and then how they can actually approach you or some other an algorithm strategy and how they should deploy. And what I understood, if I summarize it right, you need to have a big strategy which actually has mini strategies in it. So
Correct.
that your capital is always protected, and
Correct.
it actually does, and it gives you the expected, where you said the CAGR to be 24. So anyway, right, for any of us who are either investing or trading, we should always see in the coming 5 years, we are always at a 20 to 24%. That's where our money is working for us. Otherwise, it's as good as we keep in an FD or a bond. It doesn't need to, we need not struggle to put into trading or investing. I'm very interested to know what are the other products. Since you're creating so many interesting products, I want to understand your product suite, what you're creating, and I want to even explore further how we can actually even collaborate in future.
So, from a educational standpoint, after teaching close to about 100,000 people in the financial markets.
Wow, congrats.
Yeah, we have done about 20 webinars, and the highest participation in a single webinar was around 12,000 people. So, of course with the partnership with Money Control, we learned lot of things as trainers also. When you try to teach concepts, methodologies, you try to learn lot of people. I found lot of gaps. For example, today in Indian financial markets, I'll give you a perspective. There are more than 1000 SEBI registered analysts. There are more than 1500 PMS and AIF companies.
Yeah.
There are more than 4000 stockbrokers like Zerodha, Upstocks. There are at least 10,000 unregistered analysts in Facebook, YouTube.
More than that, Ashok.
You cannot even count the number of
Exactly.
influencers, you call them influencers, and at least 25,000 to 50,000 trainers are there, and on record there are around 55,000 mutual fund distributors. In spite of such a huge ecosystem, still people have a problem. Why? There are two problems today. In the olden days, people didn't know what to do. Today there is so much of bombarded
still they don't know
information,
what to
and
do.
still they don't know what to do.
So what to do is a very common thing.
Yes.
Yeah.
For example, I will give you a simple example. Suppose you want to make idli, you want to eat idli. So, you go to a hotel and say, I want to eat idli. So, there what happens, one guy will come, he will give you a stove and say, here is my stove, pay me rent, make idli and eat it. That is a stockbroker. Correct? He will not tell you what to buy. He will say, you buy whatever you want. One more guy comes, he will give you batter and take money from you until you make your idli. At the end of the day, you will get everything under the sky except idli. That is the problem with the retail investors. One is too much of excess information. Second, to finding the right information from this too much of information is a rocket science. Okay. So, what we have found is there is a void. You need to give them clarity of information. So, we build one simple app on seasonality. For example, we drink lot of coffee in winter, eat more ice cream in summer, we spend more money on Akshaya Tritiya day for gold purchase, we buy more flowers on festivals. These are all seasons, patterns. Mangoes are only sold between April and May. You go to any juice corner, you don't get mango juice in October. Even if you get, it's not good.
Even if you get, you shouldn't take it.
Correct. Because it is not seasonal.
It's not seasonal.
Similarly, markets, that is ultimately what? It is purely driven by sales. Your consumption is influencing the sales will influence profit, profits will influence share price. So, technically, any commodity in the planet will have a seasonal behavior. The same thing holds good with shares also. So, we have built one application which analyzes the seasonal behavior of almost 50,000 stocks across the world.
Wow.
We track stocks, we track commodities, cryptos, forex across all big stock markets including India, US, China and so on. Right now we have already deployed India and US market, and other world markets we are trying to add. What the tool is going to tell you is, it will give you patterns. It will study last 10, 20, 30, 40 year data and tell you the probability of this particular stock making good profit next month is high. That's all.
The repeatability of the season repeatability is what you will be.
Of a particular
exactly.
asset.
Yeah.
This is one information which we are providing. So, these kind of information will be a confirmation tool for somebody who is buying to take positions in market. See, problem is majority of them go for tips. I never believe in tips.
No, so that's exactly, I'm glad you brought it up, right?
Yeah.
The Pickright actually platform has been built
Correct.
so that there is a transparency in the whole advisory layer.
Correct.
Right? So, how do you think Pickright problem, do you think that Pickright actually fills the gap of this particular thing? We strongly believe that, so I want to hear your viewpoint.
See, the point is you have onboarded all the registered analysts, so they have a track record. So, naturally these analysts, they have their own experience in the past. Based on that, you would have onboarded them. And I believe SEBI would have done its own analysis before offering a registration certificate to somebody. So, once people are listening to registered analyst, I personally feel it is better, because I believe that this SEBI registered analyst will have at least some knowledge. But instead of that, people going to believe somebody outside, and they are sure shot going to lose money. So, now you have ensured that a sizable portion of those wrong people are kept away, and inside your area you have kept all the fair people. Now, there is one more challenge. So, when these guys, whenever even your analyst, he gives a good recommendation, what is a guarantee that this retail fellow religiously follow what is being told? For example, you tell tomorrow market will go up by this. So, what he will do, he will go home, see TV it says bearish, he will check some Google, it will say bearish, he might go in that direction.
See, you can't control a user at the end of the day, right? You retail user has his own mind.
Ultimately, my belief is you diversify. For example, let's say I'll give you a perspective. If I have to follow Pickright model, suppose I have deployed a portfolio based on Pickright, I'll not bet on a single Pickright analyst. I'll take 5 analysts of Pickright, I'll distribute 20% to each of them, and whatever they recommend I'll buy, so that I am not leveraged on one person with 100%.
No, I completely agree with you, but you are a knowledge trader.
Yeah.
But for a retailer, right, I still strongly believe if somebody even goes and buys a portfolio, diversifies there, even then the long term investment will be done. So, he will be actually making money.
That is true. So,
like what to do is a question can be answered.
Correct. And in your case, you have packs, right? So, the pack has again subunits.
So the diversification is already taken.
That is all asset. See, again I repeat, that's all asset. When somebody buys an asset, I have no problem. Why? You are owning a share of the company. If you are taking a trade, it is an agreement.
I agree. So, investment is an asset.
Investment is fine. Even, see, I strongly believe putting money in a wrong investment company is better than putting money in trading. Why? The probability of success is high there.
Exactly.
Yeah, because only 99% lose money even today. But if you look at social media, if you look at Facebook, Twitter, YouTube, everywhere you see asset trading is so easy. It looks like as if every gully has a trader, which is not reality.
One thing what I'm very interested is, and probably we should take it offline, this season, the product what you have said, that we want to actually integrate with Pickright and see how we can take it forward, because it has lot of potential, right?
We can do that.
And every trader or investor is today looking at the data, and everybody believes in data right now. So,
see, anything that is data driven is good, because I personally, I am a quant trader, I am more of a mechanical trader, a process oriented trader, a rule based trader. So, being quant guys, anything that is related to data and bunch of rules, we strongly believe that, because over the long period of time there is a high probability of you making some profits. So, I am very happy to collaborate with you and take it forward.
Great, thanks. So, well, before we wrap it up, I just want to say, whether it is trading, understand what exactly is trading, understand the trading psychology, just like how Ashok has said, start learning trading, use the money, your 1 lakh or 2 lakhs to start how the trading happens, understand what is algorithmic trading, and then get into trading with big money and with a proper strategy. And unless you do that, there is a chance of and a high risk of losing. That is what actually SEBI is also telling, 9 out of 10 traders, they lose money. So, it's very important to understand, if the money is very precious to you, start investing. Pickright is one platform where you can start investing, and Strategon is one platform where you can actually find algorithmic strategies. So, you can contact Ashok. The links for both the companies are down here. Subscribe and keep watching. Thank you. Thank you, Ashok.
Thank you so much, Archana, for hosting me. Thanks, Pickright, for this opportunity. Thanks a lot for the lovely lunch today, and I'm very happy to be here in your office today.
Thank you.
Thanks so much, viewers. Have a great evening. Bye-bye.
Bye.